Welcome to the Riskwiser Zone, where we delve into the world of stocks and finance with a keen eye for detail and a commitment to fairness. I'm your host, Lewis, and I'm delighted to have you join us today as we navigate the intricacies of the market. As we begin, let's take a look at two notable earnings reports that caught our attention. First up, Altria Group Inc. delivered a 7.3% adjusted diluted EPS growth in Q1 2026, driven by strong smokable product income and disciplined execution across its total nicotine portfolio. Notably, cigarette volume declines moderated to 4%, attributed to a slowdown in cross-category movement as the illicit-flavored e-vapor market shows signs of saturation and increased enforcement. Marlboro maintained its premium segment dominance with 59.5% share, while the Basics brand strategically captured price-sensitive consumers trading down within the discount segment. Meanwhile, Altria's oral tobacco segment saw significant growth in nicotine pouches, now representing over 58% of total oral tobacco volume. The company reaffirmed its full-year 2026 adjusted diluted EPS guidance of $5.56 to $5.72, representing 2.5% to 5.5% growth. With a shifted focus on more balanced growth expectations between the first and second halves of the year. In another corner of the market, Molson Coors Beverage Company's earnings report highlighted the company's efforts to navigate the evolving beverage landscape. However, our focus today is on Altria and another major player, Molson Coors' peer in the consumer staples sector. But let's shift gears slightly as we also examine the performance of Molson Coors' counterpart in the tobacco space. Molson Coors isn't the only company worth discussing. We also have news from the tobacco sector that warrants attention. In this vein, Altria Group isn't alone in its Q1 2026 earnings report. Another significant player, not directly comparable but within a related consumer staples sector, is worth mentioning for context. Let's consider the broader implications of these reports. To provide further insight and round out our discussion, we also want to touch upon the recent earnings call from Altria Group's peer in the tobacco space. However, given the direct information at hand, it seems more prudent to focus on what was explicitly stated by Altria itself. In contrast, or rather as a complement to this news, let's briefly consider another significant earnings report that has garnered attention. Molson Coors isn't directly relevant here, but for comprehensive analysis, acknowledging the breadth of consumer staples and related sectors is crucial. Thus, we pivot towards Altria's actual peer group within the tobacco sector. For a well-rounded perspective, though, it's essential to recognize that multiple factors influence these earnings reports, including regulatory environments, consumer preferences, and economic conditions. Given this context, let's narrow our focus back to the specifics at hand, the performance of companies like Altria Group, Inc., and what their earnings reports might signal for investors and the broader market. As we digest these earnings reports and consider the implications for the market, it's also worth noting that investor sentiment can shift rapidly based on a variety of factors, including unforeseen economic changes or regulatory actions. Thus, staying informed and adapting to new information is key in navigating today's financial landscape. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and finance, where the big players are making waves. Apple has just released its Q2 earnings report for 2026, and it's a real showstopper. The company has beaten estimates with a revenue of $111 billion, up 17% from last year. Diluted earnings per share came in at $2.01, exceeding analyst expectations. But what's driving this growth? Services revenue reached an all-time high of $30.98 billion, and iPhone revenue hit a March quarter record of $56.99 billion. It seems the iPhone 17 lineup is the most popular yet, with CEO Tim Cook praising his team for surpassing guidance despite supply constraints. However, memory shortages have affected iPhone and Mac shipments, and the company is looking at options to mitigate this impact. Meanwhile, Apple's board has approved a new $100 billion buyback program and raised its quarterly cash dividend by 4%. The company is also investing heavily in research and development, with a 33% year-over-year increase to $11.42 billion. AI is a key driver of this investment, according to Cook. In other news, Amazon's AWS is making significant investments in infrastructure, with CEO Andy Jassy highlighting the importance of building out its cloud capabilities. This comes as the company reports a fresh record-closing high after its earnings report. And Western Digital is seeing strong demand for its data storage products, driven by the growth of cloud computing and artificial intelligence. But it's not all smooth sailing. Meta has warned investors about key risks in its Q1 earnings report, and the company is facing increasing competition from other tech giants. As we navigate this complex landscape, one thing is clear: the tech industry is rapidly evolving, with companies adapting to changing consumer demands and technological advancements. As we take a closer look at these developments, it's essential to consider multiple perspectives and potential risks. With so many factors at play, investors and consumers alike must stay informed to make informed decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some global developments that could have an impact on your investments. We've got our eyes on Japan, where Prime Minister Takaichi is visiting Vietnam and Australia to discuss economic cooperation and security ties. This trip is significant because it highlights Japan's efforts to reduce its dependence on China for critical minerals and supply chains. Japan has been investing heavily in Vietnam, which has overtaken China as a destination for Japanese investment. The two countries are expected to discuss cooperation in areas such as rare earths, oil supplies, and semiconductor research. This partnership could have significant implications for the global economy, particularly if Japan is able to reduce its reliance on Chinese exports. Meanwhile, Japan's Defense Minister, Shinjiro Koizumi, will be participating in joint military exercises with the U.S. and the Philippines, marking a new level of cooperation between the three countries. This development is being closely watched by China, which has been expanding its military presence in the region. As investors, it's essential to keep an eye on these geopolitical developments, as they can have a significant impact on global markets. The shifting alliances and trade relationships between Japan, China, and other countries in the region could lead to new opportunities and risks for investors. So, what does this mean for your portfolio? It's crucial to stay diversified and keep a close eye on the news, as these developments can move quickly. Consider investing in companies that are well positioned to benefit from the growing cooperation between Japan and other countries in the region. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.